Good morning, everyone. Welcome to the 24/7. My name is Niharika Valia, and I am with you for the subject of AFM, and I am starting with the examination of accountancy there. So let's talk about the topic of accountancy that we were dealing with yesterday. So when we talk about accountancy, how do we deal with it? In terms of accounting, introduction to accounting. When we talk about the base of accounting, how is it that accounting is defined? Today we'll be talking about the next level, that is what are the various principles of accounting. Accounting has some backups now. Accounting has a few things that they define in terms of their beliefs, their conventions, their principles. Just like any human there, accounting also has their own norms, right? Their own principles, their own way of working. So how do they define it? In terms of accounting, it helps organization in taking management decisions, formation of planning, control systems. Basically, accounting is responsible for the entire systematic working of the organization in terms of recording their financial transactions. For all the financial transactions, it plays a very important role, right? So that's how we define the area of accounting in terms of the financial reporting with formulation and implementation of organizational strategies. Okay, with this particular theoretical area, accounting principles have been formed with the sole reason that somehow we need to have a base. If I have a specific belief that this is how I want to note it, then I'll pursue towards it. That is accounting principle. So accounting principle is just a way of working which the organization takes up and they follow that. Not only a particular organization, but multiple organizations also follow the accounting principles in a similar manner. That brings uniformity in working, which leads to easy comparability of the information as well. So when we talk about accounting principles can be divided into the among four parts. Okay, so let's talk about these four parts as well. For a moment, let's take it here. First is accounting assumptions. Accounting has assumed a few particular things. This is how it is going to be. That is called accounting assumption. Then the second one is accounting concepts. When we talk about accounting concepts, it's basically a few things which they have taken up in that way as well. This is a theoretical way that they have decided that we'll be working in certain manner. Then accounting has its own limitations as well, which they call the accounting constraints. And with all these three things affecting the entire working, they have accounting standards. When we talk about the accounting standards, what is accounting standards? Accounting standards are those standards which have been built up with the sole purpose of maintaining the way they decided their working should be. Now, let's move on and talk about the topic of accounting assumptions. Starting with that. In terms of accounting, there are certain things which are silently assumed. First is money measurement. That means in an accounting scenario, we'll record only that thing which can be measured in terms of money. We will not record things blindly. We will record only those things which can be expressed in terms of money. Next point is business entity concept. When we talk about the business entity concepts, it says if you talk about the person who invested, Mr. A, he's the person who invested the money, and business entity, that is the business in which he invested. This is Mr. A and this is the business entity. So when we talk about this scenario, can you see the person and his business? They're going to be two different things. So when the person invests in the business, it is called capital. And it's not like that it's his money, he can do whatever he want to, he can invest if he wants to, if he can live he can just leave it if he doesn't want to. But the point is, the if he invests money in the business, now the money belongs to the business. If the particular person wants to remove that money, he's answerable to the business. Why is he taking money out of the business? That is what they called drawings. So this is clearly a thin line of distinction has been given as per accounting, that the person who has invested is a different scenario, but the business entity is a different set altogether. Then the next point is going concern. In terms of going concern, the organization says that men may come and men may go, but the organization is here to stay. Going concern clearly states that in an organization, the organization is going to continue for a longer period. For example, for the business, for its growth, I have got a specific asset, and the asset may be by equipments. So let's talk about that. The equipments that the organization is using, that's their equipment. But if they're looking forward to using it for a long period, okay, let's take an example. The organization bought a car for its movement, for the transportation of goods and services. Aren't we looking forward to the fact that if the car lives for 8 years, the business is going to outlive that car? Right? So when we talk about the going concern says that the organization is here to continue for a longer period till the time you do not see anything which in the foreseeable future states that hints that the organization might end. So that is one of the basic concerns, that is one of the basic assumptions that we keep. If the business is expanding itself, it is here to stay. Next point is time period. An important element is time period. In terms of time period, how do we define it? The years are defined. If you and I are studying a specific book, give me an entire book without any chapters or even paragraphs. I'll not read it. As soon as I'll see it, I'll be like, the entire page is filled. I cannot read like that. How do we read things? We read things if they are based upon topics, if they are based upon subtopics, isn't it? So when all these things are there, then how can we study the entire business in a specific time period, in a weird way of distribution of time? We need to decide what time period we're choosing up. So that means in terms of time period, we'll specify what time we are taking up. That means in terms of accounting assumption, we'll look forward towards the yearly distribution. That means we'll start from the 1st of April and we'll end it up on 31st of March. What we call a financial year is what we define as the time period in which the organization works. Okay, now with this, the next point that comes is the accounting concepts. Accounting has various concepts which helps us to study how does the entire business exactly works, right? So I'll be starting with this. Let's talk about accounting concepts now. First is matching concept. Let's talk about the matching concept first. When we talk about the matching concept, it's a concept which states that I spent 100 rupees this year so that I could earn 1000 rupees. And so, what is the profit according to you? It would be 900. The profit would be 900 because I spent 100 rupees and gained 1000 rupees. That means the income for the current year is earned by making the expenditure for the current year. That is what we define as matching concept. The matching concept states that whatever money that you are spending in order to earn in the current year, that is how we define matching concept. Then variable or objectivity concepts. See, under this, what happens is if you say that in a bank you've always seen there's a pay slip. In a bank, there's not only the pay slip. In terms of a bank, you will find that multiple things are there. The variable concept says that, or the objectivity concept says, if you think there's an expense, if you think there is an income, where's the proof of it? Maintain all those proofs. That means in terms of the books of accounts, we maintain the written form just to specify or verify whether what we are stating is correct or not. This is the point which talks about the variable or objectivity concepts. That means the things that we are stating should be verifiable. Next point that comes is historical. See, When do we record a particular transaction? Do you know? If I bought a car, then the value of the car, say it is 10 lakhs. So I'll note the value of the car once I've got the car. Then I'll keep the slip for the purchase, that is in terms of variable objectivity concepts. And in terms of the historical concept, if I bought it after buying, I am recording it and I'll record it at 10 lakh. If the value keeps on fluctuating every year, it is not relevant for me. That is how we define the historical cost concept. We will not record the things at the current price, but at the price at which we purchased it. That is how we define the historical cost concept. The next point that comes is revenue realization. It says the moment your revenue becomes due, only then you note it down. When you see that there's a certainty that the money is going to come to us in any case, only then you record it. That is called revenue realization. We record things only and only when the things are sure that we'll be receiving it. Then full disclosure is one of the most important principles. Full disclosure principle says whatever accounting policies you are using, whatever methods you are using, all those methods have to be specified clearly. Then dual aspect. Dual aspect concept says that in an accounting scenario, we have double entry bookkeeping. It says, see, the barter system has ended. So if I want to purchase something, I pay. I pay in cash, isn't it? So that means with if even if I make a single purchase, I get that particular thing, but I lose money. If I sell something, I get money and I sell that thing, right? That means every transaction has two aspects. So it is called dual aspect concept. So these are the various accounting concepts. Now moving on towards what is exactly accounting constraints. Okay, there are certain things which are accounting constraints. There are certain conditions which really affect our the way of working or which defines our way of working. First point is materiality. Materiality means whatever is important. Remember, if we make a particular project, you and I, we are working on a specific project, and I ask certain information from you. If you provide me information other than the project, then the entire information is not important for me at all. It's not relevant. So materiality concept says whatever is material for the business or whatever is super important for the business, highlight and keep those relevant information for handy for the people. That is how you are not going to misguide them. Rather, you will be guiding them whatever way the organization is taking up. Then consistency. See, changes are allowed. It's not like that the organization cannot go for the changes. But consistency means if you have shifted from method A to method B, so after this there won't be a change again. You won't keep on changing your methods every now and then. That is how we define the term consistency. Then prudence. It is also called conservatism. The organization is scared. It is scared of what? It is scared that there might be losses in future. As soon as they see a loss coming up, they keep a certain amount of money aside for it. That this is the amount I'm keeping aside. What if there's any scenario where we might lose money? So it's always better that we prepare ourselves for the worst and we keep a certain amount of money aside for such foreseeable losses. So that is the prudence concept or the conservatism. And then we have the cost benefit concept. That means in an organization, we are going to look forward towards the fact that whatever what benefit are we getting from the cost that we have been incurring for the organization. So these are the various accounting constraints that we are talking about. In the upcoming class, I'll be talking about the MCQs on the same, as well as we'll continue with the topic of accounting standards as well. That is the last topic for this particular class, that is accounting standards. See, accounting standards are certain things that the organization has decided to work in a certain manner. When we talk about accounting standards, these are basically the rules and regulations which have been formed. So these are formed and issued in our country by ICAI, that is in Institute of Chartered Accountants of India. ICAI issues the accounting standards for our country. Earlier we were having AS. Recently, due to the international financial reporting standards, the international level decided that the India was not able to keep up with the presentations which was happening at the international level. So we were asked to follow IND AS. That means Indian accounting standards. We made new accounting standards in order to match up with the international financial reporting standards. So that is how we came up with the IFRS, and Ind AS were issued. So earlier ICI had issued the around 29 standards, but now a new set of Ind AS is also around the corner. It has been in the practice from quite a long time now. So we'll be talking about all these things plus MCQs on the topic that we are discussing in the next class. So let's meet up tomorrow. But before that, our CAIIB batches have started. And if you're looking forward to the JAIIB batch as well, all you can do is you can check out our website for the same, right? So let me show you where to go to look forward to it. Here on our website www.adda247.com. As soon as you'll go here, you'll find all the details for the JIB as well as CIB, and this is the area. Just below the banking, you'll find JIB and CIB examination, and here you'll find all the details of the same. Our batches are given here, right? The JIB November December batches are there on this. Then November December batches are there. The new batch would be here any moment now. So when we look forward to the JIB 2020, this is for the 2023. All the batches have been specified for you. The English medium batch as well as the bilingual batch. The batches are going to start very soon. So if you're looking forward to this examination, then what you can do is you can take up any of these batches. So if you're looking forward towards the English medium batch, this is the area. You can look forward to the JIB batch, right? So all the details for for our classes and the teachers who are taking up the classes, you can look forward to that. All you can do is you can use the code Y541 and you can apply it. You'll get a discount of 80%, which is there for a very limited period. So if you're looking forward towards the examination, then kindly do not delay and join the batches before they start so that you can understand the concepts from the very beginning, right? So I'll be meeting you tomorrow at the same time. Thank you, everyone.